what we're looking at is the end of the bear market. The spring is coiled so tightly that it's about to rebound, especially as we see things rotate. People taking profits from metal trades and rotating into Bitcoin because they see Bitcoin has been flat for the past year largely, and it is the next opportunity to rise up. So people just have to realize you can be bearish, you can think it'll go down, but just remember, it'll go back up after. Even as the most staunch bear, you cannot think it's going to go down and go to zero unless you're just oblivious to the world. In labs today, they can replicate gold out of lead. I don't see the boomers worried about that. That is a bigger threat to gold than quantum computing is to Bitcoin. If you think about the quantum threat, it is not that someone's going to use a quantum computer to hack your bank account, Giovanni. They'll just shut down the whole banking system completely. So no one seems to be worried about that. So everything is directed to Bitcoin only, but I just don't see it as a rational conclusion.
Bitcoin has been slammed from nearly every possible angle. 4 consecutive red monthly candles, an unusually rare occurrence, have tested investor patience and conviction. While nearly every major asset class has enjoyed a powerful run, Bitcoin has conspicuously lagged behind. Precious metals surged dramatically, with gold nearly doubling its market capitalization and silver experiencing an explosive repricing. AI-driven equities rallied aggressively. Traditional stocks had their moment. Even foreign exchange markets saw significant movement. Mao begins by rejecting the idea that Bitcoin has been left behind. Instead, he argues that markets move in rotations. Capital flows from one opportunity to another, seeking undervalued assets after profit-taking elsewhere. The recent surge in precious metals, particularly gold and silver, reflects a broader trend. Investors fleeing fiat debasement and seeking hard assets. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
Bitcoin has just been slammed from every single possible angle. Like, we're having the 4th red month in a row, which is very unusual to say the least, but we've seen everything have a run. We've seen metals have a run. Gold almost 2x its market cap. Silver 4x'd, I think, close to 4x their market cap. And these are, $20 trillion assets, and they're able to do that. And we've seen Bitcoin go flat, sideways, and down now. AI stocks have had their run too. So everything's had a run except for Bitcoin. So I think what we're looking at is the end of the bear market. The spring is coiled so tightly that it's about to rebound, especially as we see things rotate. People taking profits from metal trades and rotating into Bitcoin because they see Bitcoin has been flat for the past year largely, and it is the next opportunity to rise up. Well, the 4-year cycle is a myth. Like, there is no reason why, if Bitcoin adoption is structurally changed, which it has, that it'll simply follow the previous cycles. Like, Bitcoin is evolving constantly. The market dynamics are evolving constantly. There's no reason why, if you flip your coin 4 times, you go heads, heads, tails, heads. Like that's just irrational thinking. If you're just trying to align it, like it's got to follow this schedule, then I think that is a recipe for disaster, especially if you're betting a significant amount of your money on that cycle, because Bitcoin is fundamentally different today than it was 4 years ago. We have institutions buying, we have Bitcoin treasury companies, and opinion in the Bitcoin space is divided on treasury companies, but I see them as a net positive because they are a constant source of buy demand, and I call that the infinite bid. They exist to buy Bitcoin. And you have countries getting into it too now. So there is really little in common in this cycle and in the future with anything in the past as Bitcoin is starting to evolve. I think if you want to follow something in history, what you should be looking at is the chart of the German mark against gold, where it's kind of going like this, up and down very rapidly in a period of a year as you have a change from one system to another. But that is exactly what Bitcoin is. It's the shifting of one system, the broken fiat system, into a sound money system. And if you need any more reasoning or evidence to that extent, it's the precious metals. It is that shift to hard assets. And that in and of itself should be an indicator that this is the trend that we are following. I think the pullback for the metals is warranted because it was overheated. But the core thesis there is that people are looking for hard assets and they're looking for things that are not easily dilutable. But the problem is they need to relearn the fundamentals of why gold and these metallic monies failed over time, which is they can be manipulated heavily and they are largely paper-based. Like, it's not a spot-driven market. It is mostly paper. In the majority of markets, I think China being one of the exceptions where they're physically delivering. But it's still a positive development. Like, I think I'm not unhappy that these metals ran. Like, it took them 50 years to, get where they are today. So I think that shows that there were people with conviction and the thesis was right, that you want hard assets, not fiat infinity printable paper. And eventually some of those people will rotate into what is digital gold, which is Bitcoin, because they understand that the supply of gold and silver is not capable, and you cannot know the full supply. It's not auditable. You can also see, like, there are technologies out there like fusion technology that will be able to create gold from lead. Silver, even though it has industrial applications, which was one of those reasons why people were valuing silver highly and saying it should keep going up, that industrial process is actually it works both ways. It's a byproduct of industrial process too, but it's also consumed in industrial process. Whereas Bitcoin is not a byproduct of anything, and it is not used in anything, but it actually has one big replacement use case, which is replacing real estate. People storing value in housing and apartments and land. So I think eventually people will come to understand that, Bitcoin is better. It is verifiable. You can teleport it anywhere in the world. You can send it without any intermediary. And the spot markets are incredibly liquid. So I guess that's the reason why Bitcoin takes a hit. And we're not going up with anything good, but everything bad that happens, we take a hit. But the reason for that is because Bitcoin is so liquid that it can react to any concerns anyone has in the market at any time, even on a Saturday and a Sunday. But eventually this has to stop. Like, Bitcoin's been this punching bag for months or maybe a year. And eventually Bitcoin will demand the respect that it deserves because of the finite supply. And people kind of think, oh, there's so much paper Bitcoin, like there's so many people selling, but that will only happen until it stops. And when it stops, it'll be very abrupt. And then you'll see the reaction in the market when the supply shock hits.
Bitcoin improves upon gold in nearly every dimension that matters in the modern world. It is verifiable, instantly transferable, permissionless, censorship-resistant, and globally liquid. It can be teleported anywhere without intermediaries. Mo also introduces a powerful idea: Bitcoin as a replacement for real estate as a store of value. For decades, individuals stored excess capital in land and property. Bitcoin offers a more liquid, portable, and defensible alternative.
Bitcoin is not designed to appreciate in price. The appreciation in price is a function of the scarcity, which it functions the same as anything else that is scarce: real estate, precious metals, etc. So it will go up because there is increasing demand, and it will go up because there is utility to it, which is what he identified as what it was created to be: decentralized, permissionless, uncensorable money. There is great utility in that function, especially today, in this day and age, where you're seeing more and more attempts at asset seizure. So one of my predictions for this year was that Elon Musk is going to come back to Bitcoin. And this is because in California, they're trying to pass the wealth tax, right? And a lot of his friends are from the all-in podcasts like David Sachs and Chamath and those guys. And they are feeling this pressure. And Elon knows that too. It's just whenever he has cycles to really reason through this thing, I think he's going to make the same conclusion, because you can run from asset seizures, but to a certain point. Like, people are moving to Texas now, but what happens in 10 years in Texas? Does it become blue? I don't know. Nobody knows these things. Or will they try to change the law to tax wealth and unrealized capital gains? Because what you're fighting is a core system of human civilization, which is people that want to take and believe that they can take indefinitely when you can't. Like, money doesn't grow on trees. And this is what we're finding. Like, it doesn't. And hard assets are repricing the world. And in repricing the world, this is where you see hard assets appreciate in price. There is no model out there that predicts Bitcoin goes down over time. Some of them taper, like Bitcoin 24 from Saylor, but every other model, stock to flow, power law, everything is numbered go up. And I think that is the direction it's going to go. So people just have to realize you can be bearish, you can think it'll go down, but just remember, it'll go back up after. Even as the most staunch bear, you cannot think it's going to go down and go to zero unless you're just oblivious to the world. In labs today, they can replicate gold out of lead. I don't see the boomers worried about that. That is a bigger threat to gold than quantum computing is to Bitcoin. Quantum computing is not a threat. The threat of quantum is not to Bitcoin. It is to everything else. Like, the entire banking system, all of this infrastructure, encrypted government sensitive communications. This is all going to be destroyed when quantum computers arise. And I think the Bitcoin network will be able to upgrade far sooner. And we already have a number of mitigations that can be deployed relatively quickly. When there is a clear and present danger to Bitcoin, the Bitcoin nodes, the plebs, the network, they upgrade very fast. And it's not going to be like a slow fix that's going to take years. And we also have preventative measures too. Blockstream has a lot of research underway to mitigate the threat, but the threat does not exist in any form factor today that is remotely credible. All of the quantum computing marginal threats are them directing the quantum computer to find the answer and showing the computer this is what the answer is, and then it can get there. So that's the state of the quantum computing world today. And yes, it can accelerate quickly, but it's not the biggest threat to Bitcoin. Quantum computing is not the biggest threat to Bitcoin. Quantum computing is the biggest threat to everything else, because Bitcoin will be the resilient functioning network. If you think about the quantum threat, it is not that someone's going to use a quantum computer to hack your bank account, Giovanni. They'll just shut down the whole banking system and nuke it from an external threat actor. And that will be the end of the banking system completely. So no one seems to be worried about that. So everything is directed to Bitcoin only, but I just don't see it as a rational conclusion. This is true for contentious changes, but like in the past, you go back and Bitcoin had critical bugs. There is very clear consensus that a bug is a bug, a critical bug, and it'll get fixed almost immediately and rolled out. And the other point too is that we don't need to rush to fix a quantum threat, to address the quantum threat that does not exist, because that can have unintended consequences. You can change the cryptography to a different algorithm, and maybe that is not quantum safe in the end. We don't know. So rushing a fix out is actually the most dangerous thing to Bitcoin, especially when the threat does not exist. And a lot of the quantum threat is mitigatable. You just need a key path a spend key path that will be upgradable later on to spend your Bitcoin. And that key path doesn't need to have the signing mechanism defined today, but as long as that path exists, there is a way out. But the biggest danger is rushing some fix in now that actually makes Bitcoin breakable by classical computers, not quantum computers. So there's a fine line of balance between protecting the network by having a quantum resistant cryptography and adding some cryptography in there that is vulnerable today. I've increased it actually to 1.33 million in 2026 because I think we're overdue for a bull run. And I am a permabull, and I don't really see the existing system lasting that much longer. The big volatility and run-ups in precious metals, to me, is the biggest indicator. And that shatters another common myth, which is Bitcoin is too big to 10x. It is not too big to 10x. The increase in gold market cap from 20 to 40 is enough to 10x Bitcoin, and maybe even more. And it shows like the largest asset on the planet could almost double itself in a very short time frame. So all of the cards are on the table now. But I think people underestimate exactly how much resolve is in the Bitcoin hodlers. Like, we are the buyers of last resort. We are the holders of last resort. There is nowhere else to go. There is nothing else to invest in for the long term other than Bitcoin. There is nowhere else to go. And I think another thing that people have to realize is you can predict the price is going to go down, but any big drop is a discount. Like, just take strategy because they're the biggest. You're going to let them average down. If we go down to 60, 65, whatever people are predicting, they'll start averaging down. How long will the market let them average down before the market understands that they don't need to let strategy average down? They could sell higher because strategy is willing to pay higher. And when these other treasury companies come into play, I think we're going to see a lot more shock in the demand of Bitcoin because, there's only so many days in a week. When strategy has announced their buy, there's that joke like, Bitcoin will go down because they announced their buy. But when you have several big players all buying, there are not enough days of the week where it can safely drop down without another big player scooping it up. So I'm really bullish still. There is nowhere to go for us other than Bitcoin.
In closing, Samson Mo's thesis is uncompromising. Bitcoin is not one trade among many. It is the endpoint, the asset of last resort, the store of value for a world confronting the limits of fiat money. Volatility will persist. Doubt will remain. But Bitcoin holders have unmatched resolve, forged through years of drawdowns, ridicule, and disbelief. There is nowhere else to go for long-term capital. There is nothing else to invest in that solves the same problem. Bitcoin is not finished. It is only waiting.